Bitcoin once again pushed ever so slightly higher, but we are now starting to see a potential bearish structure form. In this video, we're going to be jumping down into the technical analysis of Bitcoin, taking a look at what's been going on, what I think is likely to happen next, and all that wonderful stuff. As we get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap in the bell, selecting all the notifications so you do not miss another video update. And if you haven't yet joined us in Discord, check it out, linked in the description below. I don't think you'll regret what you find down there. It's completely free. It's the first place we go to notify you of everything that's going on in the crypto space. Let's jump into this video then. So here we have a Bitcoin paired up with USDT. We're using the BitGet spot exchange and we're on the 1 hour time frame. So if you want to replicate the chart, those are the pieces of data that you're going to need to bring this one up. Now we're looking at smart money concepts here. Smart money concepts gives us the idea of big money coming in and big money coming out of the space, following the large funds, the smart money, essentially. Okay, we can see that we had a bearish structure that was confirmed with a break of structure and a break of structure. This was then changed to a change of character to a bullish state of play, and we got confirmation of this over here in the early hours of this morning, about 1 a.m. So we can see that approximately there. So what's going on? Well, we now are in a bullish structure, and it's confirmed a bullish structure, which means we have a weak high, strong low. Not likely to come down to that low on this 1 hour chart anytime soon. But of course, we have to kind of consider bigger macro pieces. As I said, I think we are potentially seeing a bearish structure form here, and therefore we want to be a little bit aware of that. Okay, we did obviously see this as a potential fifth wave completed down here. And again, we'll be looking at this as a diagonal structure, meaning that we are, of course, looking at that move upwards still. So this could be pretty positive for us to see this kind of playing out. We're looking at this as a I'm going to say contracting. Let's just go ahead and sense check, because I want to see whether or not we are contracting down on this one. Let's go ahead and take that. It's not contracting, so that's interesting. We must also just check our wave 5 situation. Actually, no, that's actually okay. As long as that is longer than wave 1. Let me just check also on that note. And there's a few things here that we just want to make sure that we're on the right path. And it's a bit on the small side. Maybe it's not a diagonal. Okay, we'll revisit that later and see how that plays out. If it's not a diagonal, WXYXZ, and obviously that does change the macro view ever so slightly. But as I said, we are still in a potential bearish structure formation, not yet confirmed. But we can see here that we are coming up into higher highs. So if we kind of start to see this from our wick over here, up to here, for example, we can see higher high, 3 of those, and we are also coiling up in this low position just here. We've got ourselves some higher lows, and you can see here that it's kind of coiling up quite a bit. Okay, now we can of course break up. We do have our downward trend line as well. That's a little bit higher on the price chart, as we kind of did see us break above the $27,000 briefly here, and you know, on this hourly chart we still have a little bit more to the upside to go by the looks of it. So it's all looking okay for Bitcoin on the 1 hour, but we are a little bit concerned about those larger time frames. The daily is overbought, the 20 hours overbought, the 16 hours overbought, the 12 hours overbought, the 4 and 8 hours are overbought, right? And so therefore we are expecting a momentum to shift to the downside. We have our fair value gaps, as we can kind of see down here. Okay, we have the first one, which we tapped into briefly before moving back up, which 25,991 to 26,278. Okay, and as I said many times before, if we just jump over to BitGet, these fair value gaps are created. Just go to spot trading Bitcoin here. They're created from an imbalance in the order books, right? So we can see those order book changes here and here. Okay, so these are essentially the orders that are put in there on limit orders, for example. Then you have your market trades on this side. And so on the order book, when we start to see imbalances between buyers and sellers, so we create illiquidity pockets in price, right? And as such, price moves from low to high, or from low to from high to low, and from low to high, and it leaves behind these gaps, right? We've drawn a lot on this chart here, this trading view chart in BitGet. And as we said, right, when a large buy order comes in that can't be filled because there's insufficient sellers, price has to go from the low side to the high side, and it leaves behind the gap, right? And so that gap that gets left behind, price likes to go back down towards it, right? We see that we've had all these fair value gaps in the past come back and get filled out, right? We can see them getting filled out. And even this one most recently up here also got filled out, right? Now we've left 3 behind at the moment, but chances are they're going to have to come down, or price is going to have to come down and fill those gaps out as well. Okay, and liquidity just likes to return to where liquidity was not, because these were areas in price where there was illiquidity, as in price is increasingly volatile because there's not enough buying and selling happening within those ranges. It's illiquid. Essentially, price likes to come down and put liquidity where that liquidity was not, and as such, price wants to kind of move back down in that range, and therefore we're talking about not only higher highs and higher lows coiling up into a bit of an ascending triangular wedge, but we also find ourselves with the fair value gap slightly down lower in the price chart. Now, if we are to see a leading diagonal structure on the Bitcoin chart, then we can of course still rally up quite much higher, right? It didn't have to be done here. I was calling out 28k a few weeks ago, for example, where that seems 28, 29, possibly push 30, seems to be a good area for a wave 2 structure before having that kind of rug pulled from beneath Bitcoin's feet and price just plummets down into a big wave 3. Now, that's still okay, something that's not necessarily confirmed yet until we start to see the formation of that. But for the most part, our expectations have currently been met, right? We see little volatile pockets on the hourly chart, but the daily remains pretty clear and consistent. Essentially, we're looking at this move to the downside with nested structures internally that could potentially put us into a really big bearish position for Bitcoin longer term. So it's one of those things, right? We can see the fair value gaps that have been created on the smaller time frames, and of course we can see them also on the large time frames as well. So it's all created from those imbalances in the order books, and price will want to kind of move down towards them. So at this point, I think it's just worth noting that if you're not already signed up to BitGet, why not check it out? The affiliate link is in the description below. It's my go-to platform. It's the platform that I use for all my leverage trading and 90%, if not 95% of all my spot trading as well. There's the occasional coin that I'm looking for, a token that I'm looking for that's not listed here yet, but in time I do think most projects are going to end up getting listed on BitGet. They are expanding rapidly in the crypto space, so if you're looking for a new platform, something that maybe isn't Binance or Coinbase, then why not check out BitGet? Affiliate link is in the description down below, with KYC being optional, but if you do want to onboard fiat, unfortunately I think you are going to have to basically KYC, which for the most part it isn't actually that bad, as long as you are in a jurisdiction that allows you to basically use such a platform. So the US, for example, will have hard time doing KYC, but if you are onboarding somewhere else like Coinbase, for example, you can use BitGet in a capacity which does not onboard fiat, and in fact you can just deposit your stable coins and use it that way. But yeah, affiliate link is in the description below if that's of interest to you. Let's jump back into the charts. So we have the fair value gaps, right? We can see them in the price chart. We have our ascending triangular wedge here. We can obviously still push up a little bit higher, maybe towards that 28k if it needed to, but we are heavily overbought. But momentum shifting around on the hourly, it's not looking too bad on the small time frames. The large time frames, it's looking pretty bad. Now, as we kind of think about, where price can go, we obviously do have the CME gaps as well. Okay, so CME gaps are the futures where you have one closed position and then one open position at a different price, right? Unlike the kind of cryptocurrency exchanges where you have like a 24-hour running market, you don't have that necessarily on these futures contracts where you can then see daily closes and daily opens, and as such you get these gaps that get left behind, right, when there's a difference between the close and the open, and as such price wants to go back down and fill those as well, right? So it's something that it's not like a hard and fast rule that has to happen, it's guaranteed, but it's something that that happens more often than not. So there's two CME gaps on the price chart. Okay, we have one down here at 20,330 and 21,110, and then we have one on the higher side at 34,455 and 35,180. Now I will note there's no time restrictions on these, right? They can get filled out at 2 years down the line, and so we find ourselves bouncing around at the moment between these two areas. And we will note that on these larger time frames we do see that potential bullish movement, although I think we've run out of momentum now, so I think it's going to kind of fail. But we can see lower highs and lower lows, and they have a tendency to want to break upwards, which is kind of what we saw here by bouncing off of our 200 EMA. But for the most part, my expectations here are that we are likely to see a shift back to the downside. Could be wrong on that, but for the most part, that's kind of where I'm thinking. I'm thinking the CME gap at 20,000, so the one that's likely to kind of get filled out before the one at 34 to 35. At least at the point of recording, that's kind of how I feel about it. But the crypto market moves very fast. That may change a little. Jumping down into our Elliott wave theory side of things, you can see that we were expecting this move to the downside here, and I just want to talk about this a little bit. Okay, so we're talking about this C wave structure taking us down towards 26,052, 26,174. Now that's no longer valid, and it's not valid because we met the minimum expectations. I want to talk about this a little bit because it can cause a little bit of confusion from time to time. Okay, so if we have a three wave structure that looks like this, right? Typically, if you measure the distance of wave A with the Fibonacci retracement tool, move it over to the top of wave B, your wave C would typically land between 1 and 1.236 on the charts here, right? And you can see that I drew that instinctively right in the middle of that box, right? And now, unfortunately, it's not a guarantee. It's just typically what you would expect to see if you saw a C wave movement, okay? The minimum expectation is actually here at the base of the A wave, as in the minimum expectation would be a double bottom, okay? So that's a possible C wave structure that then reverses from there, okay? So although most commonly we move down to the 1 to the 1.236, it is what I would call a soft roll. Unlike that of the impulsive structures where we see a wave 1, 2, 3, 4, and 5, where wave 3 must be 1.618 times of wave 1. For example, we take the fib tool, we measure the wave 1, we move it over to the wave 2, and we would expect this third wave to go past 1.618. Otherwise, we cannot call it impulsive. Okay, it has to have those parameters to it. So unlike the C wave, which I would call a soft rule, our 1.618 rule here is a hard rule. It's something that has to happen. In the same way that if we want to be an impulsive movement, we have to have a 1.618. Wave 4 is not allowed to cross wave 1 and all those kind of things. Those are hard, unbreakable rules, right? But when it comes to the C wave structure, it's a soft rule, as in we would expect it to come down here, but it doesn't have to. The minimum expectation is going to be a double bottom with the A wave. So hopefully that makes sense, because if I come back down to the price chart, we can see here we just went past the minimum expectation, completing the C wave just here, failing to hit the typical structures. But I will note is we did come down into this yellow box range just here, which is the fair value gap, but it hasn't obviously moved all the way down. Now we've moved on up, we can see a very explosive move, but it's not impulsive, okay? And we can see that because we have overlapping structures. Let's go ahead and remove that. And with the overlapping structures, we need to consider that we are likely to see this as a short-term move upwards. We can see the move up, we pull back down, and if I put this right here, you can see we come up to the 1 ratio here, and the 1.236 is ever so slightly higher. So you can see right inside here. Okay, so typically as a three-wave structure, we'd go A, turn down for B, up into C. Now it doesn't look done yet. I think we've got a little bit more there to go yet. Okay, so I still think there's a little bit more. So we're talking 27,186 to 27,382. That's the likelihood there. And then we kind of look for a reversal at that point and see where that kind of goes. A three-wave structure like this, it can be a couple of different things, but for the most part, would start to kind of look like we might be coming to an end of our entire structure here, as we would look at this as a potential W, X, Y, X, and Z. Okay, and looking like it is kind of complete here. Again, I don't think that met the 1.618, which would make it valid as a impulse. Oh, actually, it did hit the impulsive structure. So, okay, we will not W, X, Y, X, Z. So we have here a zigzag right in here. We could be looking at a much bigger three-wave structure though, actually, from the high to the low, which was this one over here. And so we could see that break upwards towards 28K, but it would be something that would have to happen over a period of time. Let's go ahead and just remove all this noise off of here for a second. I'll leave those examples. And what I mean by that is we would have a potential correction here, and then a potential three-wave move up towards that 28K. That would then allow you to look at this as another three-wave structure, which will then allow you to look at this as a three-wave structure like so. Okay, so that would be kind of, one of the thought patterns I would have in my head, and puts us in that wave 2 situation. Take this to a daily time frame. Shoot on out of here for a sec. Actually, let me go ahead and just remove some of the noise from here. So we'd have a 1, 2, 3, 4, 5 diagonal in here. So it'd have to be take it to here, here, and then here. We'd have to take a look at that as a leading diagonal structure. And then from there, we come out of our three-wave movement up towards maybe 28, 29K, which we kind of more 28.4. And then from here, we have that next big break to the downside. Okay, so that's kind of where my mind is at on this. So a break upwards as we have this, but this is a daily time frame stuff, so it's going to take a long time to play out. Whereas our hourly shows us with a potential bearish structure of a move to the downside. Okay, so we are going to be looking for that correction after we probably tap into that slightly higher range one more time, move down to the fair value gap here, and then from here we probably look to break on up more towards the 28K range from there. Okay, so it's probably something that's going to take some time, a few weeks probably to play out, but that's kind of how the structures, at least in my opinion, are forming right now. So let me know what your thoughts are in the comments down below. I'm going to leave the video right there. If you found it useful and informative, smash the like button. If you're new to the channel, subscribe. If you haven't joined us in Discord, check it out, link in the description below. And if you're looking for a new exchange, check out 𝗕𝗘𝗪𝗧𝗧. Affiliate link is in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.